start from a daily chart. We can see the accumulation phase, right, represented through an inside bar at these levels. This is a seek and destroy daily profile, which we'll look at on the lower time frames. What is price telling us? Price is telling us that the order flow here on the daily chart is still bullish. Keep being long until invalidated. Next round level here is 28,000. Right, what did yesterday leave behind in the range also? It left behind a divergence between, with the low of Tuesday, and also a divergence at Friday's low. Now this here was an important sell side pool. Why? Because yesterday this was the 3-day look back. Right, we can see the market keeps holding the wick high of the bullish order block, right? So indicating that it's very bullish. Right, if it was so bullish, then it might have wanted to come back to 50% of it or the lower quadrant of it to then trade higher, but price is holding the range of the bullish order block, is also holding the range of a bullish fair value gap. Okay, so keep trading higher until the market tells you otherwise, right? The market also coming back to 50%. This is yesterday's profile, making a low of day at 50% of the wick low of Tuesday, right? So very bullish market. One thing to note, okay, in terms of the premium array, in terms of the discount array, you can use, well, we'll look at it on the lower time frames because we can refine it, but it will be located inside of this wick, right? And this wick here aligns with, well, we can see that the upper quadrant of it is outside of the BISI, while the lower quadrant of it is inside of the BISI. Okay, so so just grading this wick is important for order flow, right? If you see price disrespecting 25% of it, right, then at this level you start getting back inside the daily BISI. What I wanted to talk about was, say today we're going to have a very bullish day, okay, so a classic buy day, and the low of day is already in. What you want to identify is the reaction and the PD rays left behind around the quadrants of this rejection block. Okay, this is important. Why? Because there's obviously currently a divergence right inside of this wick where the high of Tuesday was made at the upper half of this rejection block. Okay, now if price starts to say, right, you can see so far price on the lower time frames is finding a bit of resistance at 50%. But coming inside the session that you're going to trade, if the market leaves any bullish fair value gaps, right, on the hourly chart created through these levels, even above the range high, right, this can provide a good opportunity to see New York retrace inside these levels without having it needing to return so deep inside of the range. Okay, because if this is the low of day, and New York opens at these levels with Asia and London having rallied, I think it's unlikely to see price come back all the way down to then trade higher. We'll likely use the most recent PD ray left behind either by the London session or the pre-market session to continue its trend. So important array here, the rejection block, right? So far you can see the reaction at 50%. Any fair value gaps created in here on the hourly, at what time of day, where does price come from also, right? Does price come from expansion? Does price come from consolidation? Does price come from reversal? Now, in terms of a reversal, personally, these are not levels that I want to be shorting at. I would require at least a daily divergence. Okay, so this can be done with the high of Tuesday. Ideally, if I'm going to be short today, it has to be a divergence with the weekly high, right? So the high of Monday, where Nasdaq trades above it, the S&P 500 fails to do so, and from those levels, okay, the lower time frame structure breaks. It could be also that both of them trade above, and then there is a session divergence that ends up forming inside of premium. But again, I wouldn't count on that. What you would need to look at in the moment is what did, say, the hourly time frame leave inside of this rejection block? Any fair value gaps, right? If it is so, then you want to grade those fair value gaps that are located inside of this rejection block, and you'll be able to gauge order flow from those levels. Okay, so the daily chart tells us here to keep being bullish, order block respected, fair value gap respected, gap up. Okay, this is typical of all-time highs environment, right? As you can see, obviously, from the run-up that we've had, a lot of breakaway gaps, small wicks under bullish bodies, right? And so what's telling us that this is going to stop tomorrow, right? Nothing. Ideally, you want to keep trading with the trend unless you have some kind of obvious sign. Okay, again, divergence with the weekly high, divergence with a session high followed by a break of structure. Aside from that, keep being long. On the 4-hour chart, again, you can see today, right, respecting the upper half to 50% of the wick high of the order block importance. Again, why is this the order block of importance? Is because from the price profile, right, we can see that this is where the main phase of accumulation for last week's profile was. This order block also happens to cut through 50% of the previous week's range, and this order block was formed from a shakeout, right, a manipulation inside of the range, creating a divergence at daily lows, and from there price breaking higher. This order block is also our dealing range, right, is the last shakeout higher into the rejection, the last shakeout lower into the rejection higher. Right, what has price done so far? It's retraced to 50% and now keeps expanding higher. If we look at a 3-day look back perspective, okay, and here we can see yesterday's profile, the seek and destroy profile. Right, and the seek and destroy profile by itself, in my opinion, is enough to justify that today will be a classic buy day. Why? Because that's the characteristic that tends to happen after a consolidation phase, especially seek and destroys. Right, the seek and destroys will usually have that one final shakeout. Okay, some obvious divergence, some obvious manipulation. In this case, it happened to be not only related, obviously, to a liquidity event, which is important, right? The liquidity event being the earnings, right? And this creates an obvious manipulation below the opening range low. There is also, more importantly, a divergence at the previous day's low and the low of Friday, right? The low of Friday was important here because this was the 3-day look back low. So the S&P 500 trading under these levels, Nasdaq failing to do so. Right, and since the open, we've had a gap up. Right, and price has now done what? Created the range of a new bullish order block. If we look at yesterday's profile, obviously the key levels that I had identified coming in the day, right? We had the range of the hourly bullish order block. Price ended up making the low of day at 50% of it. And also the range of a bearish breaker. Right, now I was using the wicks in terms of a refinement. You can see that the market created a high of day right at the high of it. If you use the entire range of the bearish breaker, you can see price rejected at 50%. Okay, so very sensitive level to the range. This was, and still relevant also. Why? Because it's part of the 3-day look back. Right, so this here, the market used, right, you can see the accumulation phase at the low of the bearish breaker, eventually trades inside 50% of it, rejects. Right, so clearly this range here was used as a bearish breaker, but now the market has displaced through the range. Right, so we can consider now this a reclaimed bullish order block, was what was once a failed order block. now that the market has traded above it, right? If the market were to revisit the quadrants of it, we want to anticipate that it will use it as support to trade higher. And what's interesting about this level is that it aligns with the wick high of the most recent and relevant order block inside of the range, okay, which is the shakeout of yesterday. Right, you can see the wick here cutting right through the lower half and 50% of what is now a reclaimed bullish order block. Okay, so important level to have on your chart. These are discount levels. Discount levels. Now, obviously, price here is in premium, but discounted relevant to the current range, right, where price is trading in on the lower time frames. All right, you can see the clear displacement here at the open, price creating a fair value gap through the range of what is now that reclaimed bullish order block, right? You can see here the shakeout, the initial shakeout, right, the double purge, creating a bullish order block at these levels. Okay, so you know, if you come inside New York and you see that London created a low at these levels, right, and has now created fair value gaps through the highs, right, strong closures through the highs, very likely, you know, that's how we're going to see a classic buy day form. Again, I'm not in terms of premium array. I mean, we have obviously range high, okay, any divergence either with the high of Tuesday, but ideally the weekly high, right, any divergence followed by lower time frame break of structure, this can provide good narrative, okay, enough narrative to trade a open high low close profile. But honestly, I wouldn't count on that. I would prefer remaining bullish and finding an opportunity for an open low high close. Now, obviously, I'll see in the moment. Right, I'm going to trade whatever order flow is present at the moment, but you know, in the case that price is to align with all of my levels, right, create short-term lows or intermediate-term lows around these levels of interest, then obviously that's going to help me a lot find a trade inside of the day, right? Enter a trade with much more confidence, know exactly what I'm looking for, etc., etc. Okay, so discount arrays, most relevant one, this large range of order blocks from the earnings report. Just the wick of it can be enough since this is a large range. Personally, I'll just keep these levels on my chart. Okay, the quadrants of the reclaimed bullish order block. But look, if New York opens at these levels, say, right, if the profile is still bullish, price doesn't need to do this. So at that point in time, I will remove these quadrants, right? And if price is able to find displacement above the highs, then I'll simply be identifying the fair value gaps created at a key time of day. All right, say, you know, Asia expands through these levels and London retraces into it, creating some kind of short-term low or intermediate-term low at these levels. Right, and I come inside New York, and New York is located around these levels. Well, then I'd be interested in seeing if pre-market left anything interesting inside of the range, such as a fair value gap, such as an order block, such as relative equal lows. Okay, the pre-market low can be an objective in case, you know, it's a London fair value gap here. Right, so okay, so discount PD array, the order block related to the earnings report. We can still use this range here, which has been sensitive to price all week long. Since it's part of the 3-day look back, we can still use it and drag it across our chart. In terms of premium array, we have the range high, okay, any divergences created there, or if the market were to trade above it and then create a session divergence followed by a change in structure. So I think I've covered it all. I think I've covered it all. On the economic calendar front, we have at 8:30 the advanced GDP report. Okay, so that's always important information for 9:30, the opening range, right? Does it consolidate? Does it expand? Does it manipulate? Right? What are the relative equal lows and highs around it that it left behind coming inside 9:30? Did it create a fair value gap? Okay, so that's all important information to gauge at the moment. So discount array, premium array, just watch out any divergences. Personally, I don't think it's going to happen. I think this is going to rally. But, you know, you got to be open to every type of profile.